Welcome to Stock Market Update. Today is August 6, 2017. As you can see, the Dow Jones Industrial closed at another all-time high last week. And looking at the chart here, you can see that during the last 8 consecutive sessions, it has closed at a record level. And during the last 9 sessions, it closed with a gain. And also the move been pretty steep, and this looked like a 60-degree climb here, and that's pretty steep. So the question is, has the stock market topped? In this market update, we'll analyze the stock market price action and see could we find any clue to help us answer that question. And before we do that, let's go and just quickly review the market indexes on the monthly basis, just to get a big picture and also see how the month of July ended for the various indexes and for the market as a whole. As you can see on the Dow Jones Industrial here in the month of July that it just finished, and it finished very strong, close near the high of the month. And you can see also the last 4 months it's been closing up. So for the last 4 months it's been an up month. And if we take a look at the transportation closed down a little bit for the month. I believe it's a little bit weak, and well, not a little bit weak. I think it's pretty weak. You can see that it's a outside candle here engulfing the entire month of June. Although we see a little bit of a bounce here in the beginning of August, so we just have to wait and see if the transportation could make a move back up. And then if we take a look at the S&P 500, the S&P 500 similarly like the Dow Jones Industrial, it had a very strong month for the month of July, and also been closing up for the last 4 consecutive months. And looking at the NASDAQ 100, the NASDAQ 100 came back fairly strong after a poor month of June. You can see that it is a outside candle here, the outside bar that closed near the high of the June, the month of June. So it recovered fairly good, for the NASDAQ 100. And for the Russell 2000, it also put in a small gain for the month of July. You can see this candle here, a little bit of a spinning top. Kind of indicate it's indecisive, doesn't know which way to go yet. So we'll probably see a little bit more consolidation, and maybe in the month of August it will show us where is the next move for the Russell 2000. Now let's see, can we get some clue from the market to see can we answer the question, has the market peaked? Looking at the Dow Theory chart, basically is the Dow Jones Transportation versus the Dow Jones Industrial. The Dow Theory, one of the premises on the Dow Theory is that the Dow Jones Industrial, whenever it makes a new high, should be accompanied by the transportation, and that's what we call a confirmed high. And when it doesn't, for instance, in the case here, where the Dow Jones Industrial been making record high for the last 6 sessions, you could see that the transportation actually went and put in a lower low. So it didn't confirm any one of these record close. So that is a non-confirmed closing high or all-time high for the Dow Jones Industrial, and that is a -1 for the the Dow in a negative sense. That will this ascent be continued? Well, based on the Dow Theory, it shouldn't, because it is a non-confirmed high. Now, it doesn't mean that just because it's not confirming the latest record high, doesn't mean that it will the market will collapse. Right? So let's go and take a look at the other indexes versus the Dow 30, and looking at the S&P 500. Although on a monthly basis, the performance of the S&P 500 is very similar to the Dow Jones 30. But if you look at on the daily basis, if we look at here, ever since that Thursday, 2 weeks ago, we got that sell-off. Right? And you can see that the S&P 500 been confined within this this range here, this particular candle. Right? And it's just sort of doing an inside coil. So we're just kind of waiting for this this index to either break above this high and move to a new high territory, or break below and it will come back down and test some of the lower level down beneath. Okay, but if you notice, the Dow Jones just continued to climb. So that is a divergence between these two indexes. So now we got a -2 on the total score. Right? So, and if we take a look at the NASDAQ 100, okay, once again, also the NASDAQ 100 show a similar characteristic as the S&P 500. It's been coiling inside of this candle that was made a couple Thursday ago when we had that sell-off, and you can see that it's actually coiling a little bit worse because it is actually coiling in the lower half of this engulfing candle, versus the S&P is sort of like in the middle, right? So that's a negative again for the to our question. So now we got a -3 because this is a another divergence that we're seeing between the NASDAQ 100 and the Dow 30. Then we take a look at the Russell 2000 versus the Dow Jones 30, and you can see the Russell is pretty much in the same camp as the transportation. It's been declining. When you look at this here, since the Dow is making a higher high, a record high, in matter of fact, the Russell is actually declining, right? So that's a -4, I believe, right? Okay, so that's not very good here. So far, the score doesn't seem to indicate that the market could go higher. It seems to indicate the market might have topped, right? But then we take a look at a different chart here, and let me put this one on. Here we see that the Dow Jones on the top, and the VIX, which is the fear index, and the cumulative advanced decline on the the New York Stock Exchange advanced decline, and you can see the advanced decline is still holding up near the record high level, or its peak level. So that has not deteriorated much yet, and also we are not getting a divergence in sense of the when the Dow Jones close up. We did not see much of a divergence between the advance and decline. We are most of the time when the Dow Jones is up, we are seeing a positive advance decline. So that is a positive, right? So now we got 1 positive and 4 negative. Right? And the VIX here, although people keep on looking at the VIX, they say that when it's low, then we should get the market should fall. Well, yeah, when it get to a certain point, right? But doesn't mean that every time you get to a certain level, then you're gonna drop the market, and the volatility index will spike up, right? The only time that this index is really reliable is when it spike up to some extreme level. It tells us that the recent sell-off might have been ended or coming to an end, right? But there's no way that we could tell by all these low level here that a decline is imminent, right? Okay. And usually when a decline comes, it just comes suddenly, on these low impulse liquidation, right? And that's basically what we've been seeing recently. We haven't really seen anything of a correction or things like that. But we'll take a look at the individual index and then identify some of the price level that might alert us that a correction is coming and where it might find support. All right, let's take a look at the Dow Jones Industrial and take a closer look on where it might go, if it go up or if it's going to come down. So first of all, I want to point to you about this Fibonacci retracement that I have put on here on the daily chart for the Dow Jones Industrial. As you can see here, looking at this price swing from this low to this high and project that, and here is the 1618 extension, and note to see how close that the last Friday close was to that level, although it's close slightly above it, but it came very close to this particular extension level. And typically, not saying all the time, but typically this is one of the reversal level on the Fibonacci extension. When price hit the 1618 extension, it has a high probability of reversing back down, at least do a little bit of a reversal before it continue to move higher and take it out. Okay, so in this case, it is sitting right on that. So, and also note the candle. Right, let me zoom this in. The Friday close. This candle is a little bit like a hangman, not necessarily an ideal hangman. Ideal hangman is we're gonna have a smaller body near the top of the candle, and typically we like to see it a bearish candle instead of a bullish candle. In other words, we'd rather see it red instead of green. All right, so right now it's sort of halfway, so it's not that bad of a hangman. It doesn't mean that the imminent drop is going to come. Right, so if we take a look at this, and if we let me take this Fibonacci retracement now and make the chart a little bit cleaner here, so we can see some of these level in case if the answer to a question is that it's gonna come down, then where will it go? Right? So first of all, look at all these small gap here, right? These small gap, okay? These small price gap. So those small price gap most likely going to get filled on the way down. All right, and there might be a minor reaction, and when I say minor reaction is that we maybe get a little bit of a small bounce before continue on down. All right, so you see there are quite a number of these gaps down here. Okay, and you notice here's another gap. So there's actually 4 gaps waiting to be filled. All right, so let's say if it come down and fill all these gaps and come down to this level here. Okay, if it come down to this level, all right, we're only talking about maybe a 5% correction from its high. All right, and that is not that big of a deal because the market been up more than 5% and they haven't seen a 5% correction for a long time. Right, okay, so if it's gonna come down, I think this is the key level that we want to keep an eye on, or somewhere around there. Okay, because this is also the level where it broke out. Right, okay, and here, right here, came up and it actually broke out here at this level and start making its move to a record high. Right, okay, so that's one of the key levels we want to keep an eye on for the Dow Jones Industrial. Now for the S&P 500, the S&P 500, remember we were saying earlier that it's been confined within this engulfing candle here. So we basically want to see will the price be able to move up. And if the Dow is continue to move up, we would like to see this S&P 500 also move along with the Dow to new high. And that would be a positive. And then we will get a better answer to the question of has the market top. And if that's the case, if the S&P 500 continue to move up with the Dow Jones 30, then the answer would be no, right? Because if it has topped, then they wouldn't be making a new higher high or new record high. Okay. Now, if it come down and come below this level here, then we probably will see a quick test on this particular level, this pivot high here. If we come back and take a look at, so this pivot high might provide some sort of a support here. We might get a little bit of a bounce when it comes down to this 24.53.46. Okay? And then it probably will proceed and continue to come down and test 24.0570, this level down here, right? Okay, this level. So you can see there's some pivot high, and it came down and tested once before, and it got a nice bounce. And the last time that it came close to it, it actually went and made a nice strong rebound and into record territory. Okay, so we want to see when it comes down to this next level, which is 24.0570.70. We want to see will it be able to hold. And if that doesn't hold, then we're basically looking at this 23.52.73. So again, if it comes down to this level here, it's only represents somewhere around 5% correction from the high, right? So it's not a big deal when you talk about internal percentage, but it's going to be scary for a lot of people because we haven't seen this type of a pullback for a long time, right? Okay, so and if we take a look at the NASDAQ 100, right? The NASDAQ 100, remember we were saying that it too is doing the same thing as like the S&P, basically being confined within this candle here, and it's courting to decide which way to go. So if we break above this 5994.02, then it will be making a new record high, and that would move along and confirming with the Dow Jones record high. Okay, so then again, then that would give us a answer of no, the market has not peaked. Right? But if it pull back, then it's still, kind of question mark. Right? And again, if this thing pull below this level, this 5845.15, then we're essentially looking for this level, 5568.47, as a potential support, as a potential also. This only represent maybe somewhere around 7% correction for the NASDAQ 100. So again, it's not that big of a deal in terms of percentage, in terms of pullback. This is a typical of a pullback, correction, not a crash, right? Okay, so that's basically what we're going to be paying attention to, is these level here, 5845.15. If it come down, break below this engulfing candle, then we're going to be looking for this 5568.47. Also notice there is a gap here, a fairly sizable gap. Okay, so we probably get a little bit of a consolidation bouncing around here when it get down here. So we'll keep an eye on this. But eventually, what's really key is this 5568.47. If we drop below this, then we might be having a different story to discuss when that time comes. But for now, that's the level that we want to keep an eye on. And here's the Russell 2000. Okay, the Russell 2000 also pulling back. And remember, we are looking at this price channel for the Russell 2000. It hit the peak on the upper band of this price channel and start pulling back. So the level that we expect it to come down to, at least in the near term, is this 1396.90. Right? This basically is like this consolidation band here. Okay, because it sort of chopped around here for a little while before it break out and into the record territory. And then came up and found resistance on this upper price channel trend line. So right now we want to see will it be able to come back down and make it back, get a bounce and move back up toward the all-time high and start making new all-time high along with the Dow Jones 30 and the other indexes. Okay, but if it can't, then we expect to see it come down to this 1,351. Right? This level is only represents somewhere around 7% correction also, just like the NASDAQ 100. So it is not that bad, right? I know it's still a lot because we haven't seen that for quite a while. But in terms of, put things in proper perspective, it would be healthy if the market come down to that, 5-7% level correction and get a nice bounce and move back up, to new record high territory. with every the indexes joining the party, and that will give us a higher high on the market. And the question of has the market peaked, then it would be an obvious answer, no. But right now, as you can see, there are still a lot of caution in the wind. Okay, so we have quite a number of negative signs that telling us the market might be heading down, but there is no sign to say the market have peaked yet. So we could expect some sort of correction in the near term, and maybe this 5 or 7% correction might be in the card, but we won't know that until it get to those level and see how the price action react. Okay, so right now the stand is be cautious. Thank you for watching, and please don't forget to click on the thumbs up for like. And if you're not a subscriber, please click on the button either on the lower right hand corner or the my avatar to subscribe. And good luck on your trading.